Hello, chart watchers, and welcome to this Monday, September 9th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show, and for regulars, welcome back. Well, we got the Dow Jones Industrial Average continuing to push higher. We broke out of this trading range, the August trading range, late last week, and we're continuing to move to the upside, and there's some good developments here. First, you can see the Dow Jones up 73, the S&P 500 up 4, the NASDAQ up 9, and the Russell 2000 now also moving up to about a one-month high, up 17 points today and leading on a relative basis. 10-year Treasury yield breaking back up above the 20-day moving average. Had not seen that since the end of July. That is always a good sign because we've got money rotating away from Treasuries. Of course, Treasuries are much more defensive. So as money rotates out of Treasuries, it sends the yield higher, and that in turn usually results in higher equity prices. Volatility index moving down, now back down at 1521, closed on Friday at its lowest level in about 5 weeks. That is another positive development for the market. And then we've even gotten some relief in energy. Move up today, energy leading the market to the upside today, up more than 2%. Crude oil prices up about 2.5% the last time I looked. And you can see the XLE back above 60 for the first time since gapping down 5 weeks ago below that level. So that's a positive. Financials, with that 10-year Treasury yield moving up, we're starting to see nice strength in the financial group. And when you're in a bull market, you want to see wide participation. You want to see all areas performing somewhat well. And we're starting to see that now in the financial area. Healthcare, however, still struggling, trying to get back through that 91.5 to 92 area. That was where we have struggled really over the last 5 weeks or so. Got up to 91 and change, about 91.60 on Friday, but we are back down today. Healthcare, the worst performing group. Real estate down, but real estate had broken out last week and actually did very well during August when the market was weak and a lot of money rotated toward defense. Real estate did really well, so I just think we've got a little normal profit taking here. But the next 4 or 5 groups here that I list, these are all industry groups. And the reason I listed these, number one, they're all struggling on a relative basis to what the overall market is doing today. And these have all been leaders in various areas of the market. So in the technology area, software has been one of the best areas, really struggling today. In consumer discretionary, restaurants had been very strong, struggling. Renewable energy having a great day. Renewable energy has been very strong throughout 2019, but it is the worst performing industry group within energy today. Personal products within the consumer staples area, you can see has been very strong, struggling today. And then insurance brokers, even with the financials finally coming to life, here's an area that had been trying to break out, had been pretty strong, and now insurance brokers turning back down again. So I don't know, Erin, that seems kind of odd to me that, we're getting a breakout market, 2 or 3 days in now to this breakout of the August trading range, and we're not really seeing some of the leaders previously leading right now. I don't know. What do you make anything of that?
It's kind of a mixed bag right now. I know I'm still holding a lot of defensive stocks right now. They've, performed pretty well. I think there is a little bit of concern out there. It'll be interesting to see what the Fed does, that's for sure. So, but at this point, yeah, I'm still feeling a little defensive about the market overall, but there's still winners out there. I mean, I know Mary Ellen and I talked about it, that, even with August being very difficult, there was still a lot of really good, solid stock and investments out there. So really the trick is, of course, trying to find those, which is what we do for everybody, right?
Yeah. Well, when I was looking at the leaders, of course, I showed everyone a lot of the groups that are lagging today and not really keeping pace. But some of the leaders today that I was looking at, you've got aluminum in the material space up 5%. Aluminum's been horrible. You've got marine transportation and commercial vehicles and trucks leading in industrials. They have not been very good. Healthcare providers are leading healthcare. Asset managers and banks leading financials. That's not overly surprising with interest rates up. But then, just every area of the market that I look at where we're starting to see strength, even consumer discretionary, we've got areas like automobiles and auto parts, which have been really bad, suddenly coming to life. I don't know. It's just kind of a strange set of circumstances.
Yes, just trying to get our bearings here, that's for sure. But at least the market's going in the right direction a little bit here.
Yeah, and that is a good way to put it. I am trying to get my bearings straight here as I come back after a week off. I had a little jury duty last week, was sick. But it was actually interesting. I don't know. I mean, if you haven't done jury duty, it's definitely something that, I wouldn't say that was on my bucket list, but now it was like, that was pretty cool.
Yeah, no, I've done it. I was unfortunate though. I ended up on like a 2.5 week trial after that. But at the same time, it was great to see how it all worked. And you'll never guess, I was the jury foreman.
Wow. There you go.
Yes.
Yeah. I went through the selection process, which was kind of interesting, but I didn't get picked.
Yes. I guess I don't know. I came across too fair. I don't know.
I think I came across too bullish.
There you go.
What do you think of the market, Mr. Bowley? I think we're going higher. All right, take a seat.
All right. All right.
All right, well, let's get going. What we got going today?
Okay, well, as far as the upcoming schedule, I do have a workshop tomorrow. I am attempting to put something together that would be helpful as far as trading stops and targets, kind of how I go about it. I don't think there's really a particularly right way to do it, but I think my way is pretty good. David Keller is going to be in on Wednesday, and mark the calendar. September 12th, John Murphy will be here with us. So going to be a great week ahead. Today's agenda, of course, is Monday. We got Monday setups. John Hopkins is going to come in with earnings spotlight, and our first symbol will be Ford Motor Company, F, in the 10 and 10. All right, technical news and headlines. Let's get it done.
We're going to get her done. Okay, sounds good. There really weren't any economic reports or earnings reports out today. I think tonight, CTRP, I think, reports, but that really is the only one of any significance today that will be reporting. So let's just take a look at the 10-year Treasury yield. And I remember before I went away last week, I was talking about the positive divergence here with the 10-year Treasury yield continuing to move lower, but we seem to be putting in a positive divergence. And that a lot of times doesn't necessarily mean a bottom, long-term bottom is in, but sometimes the momentum just gets to a point where you just need some relief heading in the other direction. I think we were there, and I think we're seeing that now. And the fact that we've gotten back up through the 20-day moving average, if we can definitively close back up above here and hold, I think we've got a good chance for that 50-day test, which we haven't seen in quite some time. We almost did it the end of July, but really the last time we touched the 50-day on the 10-year Treasury yield back in early May. So that would be first time in a while. And then I also have annotated on here a couple of areas of resistance, yield resistance that I watch. I think this gap resistance, this huge gap that we saw back at the beginning of August, I think that is something that we want to kind of keep an eye on, maybe around 1.85%. And then the breakdown below the prior low in early July was about 1.95%. And if you connect these two recent highs, actually three recent highs in here, you'll see that trend line comes in just below 190. So I think between the 50-day moving average and all this overhead area, I think that's going to be very difficult for. I don't know that we'll see enough selling in treasuries to pierce that overhead area. So that's an area where I'd be looking for a reversal if we get there. No guarantees that we'll get there, but this is probably the best chance we're going to get for a while. Be very interesting over the next couple of weeks to see how treasuries trade with the Fed coming out with another. They got their meeting the 17th and 18th, and today's poll is asking whether or not you think they'll cut again, because they did cut back in June. Will they cut for the second time? And this is kind of controversial. So I wanted to see what everyone thought there. All right, so that's the 10-year Treasury yield. Wanted to take a look at the crude oil prices. Crude oil, by the way, this chart is as of the close on Friday, 56.52. And you can see all this overhead resistance here right around 57.5. Well, we're at 57.95 right now. Crude oil is actually up $1.43, 2.5%. So based on where it is right now, we would actually close today at the highest level in about 5 weeks. And I think we're potentially setting up, I'm going to say maybe back to this 60.5, 61 area. And the reason I say that is when you connect, first of all, you got some pretty good lows, got a double bottom in here. And when you get that double bottom, the area I look for is that high in between them. That's going to be the first key test. So if we get, I think today it's great. We're up, close to $58 a barrel. I think that could lead to 60, 61. From there, got some proving to do in terms of crude oil and whether or not we can make that breakout. If we did, then we could probably move this all the way up to about 66.5, 67. But we're going to have a test, I think an overhead test 61 if we get up there. All right, let's keep moving on. Next up, wanted to mention, because we are talking crude oil, let's pull up the XLE, energy. Now, energy, even though crude oil prices recently held that prior low, the XLE is actually broken down below it. And energy, the stocks and the ETF are obviously very dependent on the direction of crude oil, but you've also got management in a lot of these companies that are part of the XLE, and how the companies do is obviously very dependent on the direction of crude oil, but it's not entirely dependent on it. So anyhow, we are bouncing back up here on the XLE, trying to break to about a 5-week high here as well. I would point out on the recent price lows here that we did have a slight positive divergence in play. So I'm not overly surprised that we've got this kind of a pushback. Now we've got that 50-day test getting very close to a center line reset, and then we'll see whether or not energy can continue its push to the upside. You can see that over the longer term, we have a series of lower highs, lower lows, although that low in December has not yet been violated. The big thing for me with energy and materials is the dollar. And when I look at the long-term chart on the dollar, this is a 20-year weekly chart. And if you look to the low in 2011 and connect these bottoms, I believe we're still in a long-term uptrend. And I think even you could argue we're in a short-term uptrend as well, breaking out to about a 2.5-year high recently. So with the dollar continuing to move up, I just don't know that energy and materials are the play on a relative basis. They may continue going higher, and I hope they do, but I don't know that they'll go up as fast as the S&P 500. And so that would be something to kind of keep in mind. All right, the 10-year Treasury yield. Now we're bouncing here, and you can see we were on a huge downtrend, getting very close to these lows, starting to bounce. And I mentioned earlier that banks and asset managers, I wasn't surprised that they were moving higher, given the fact that we're bouncing in the yields. And this correlation down here is a pretty good indication of how the 10-year Treasury yield and the direction of the 10-year Treasury yield affects the relative performance of financials. And I think that's the really important part here. This is the correlation between the 10-year Treasury yield and the relative performance of the XLF versus the S&P 500. And you can see over the last 10 years, we tend to be in positive territory. It's not, a direct, positive, move. If one goes up, the other one goes up. One goes down, the other goes. It's not like that all the time, but I think you can definitely see that there is a pretty significant positive bias in terms of correlation between what happens to the 10-year Treasury yield and how financials are doing versus the S&P. So if we do continue to make this push to the upside, I think that could lead to some additional outperformance of financials. And that might be what's going on with some of these other leaders that are not participating today. It could be a little bit of rotation here in the near term, money coming out of some of those winners and maybe moving into some other areas that are maybe expected to do better over the next month or so, maybe as the 10-year Treasury yield continues to rise, or maybe just for the next couple of weeks. We'll see. All right, heading into the dashboard, wanted to pull up the scooter movers. And I pulled up the top down. And when you look on the mid caps, there's a software stock, there's a software stock, here's a software stock, here's a software stock, software stock. I think you're starting to get the idea. HubSpot, Okta. I mean, it is just littered with these software stocks getting hit. The reason software is not showing up as being hit any harder is because Microsoft, one of the, obviously the biggest component, not doing that badly, but many of the other software stocks that have been on fire are really getting hit today, including a couple that I own. But MDB, I wanted to point out because it was the highest scooter mover to the downside. Take a look at the chart. I think that after the big earnings move back in March, you can see we pulled back. I think this 120 area is going to be really important to the downside and to the upside. With its June move to the upside, you can see it topped out above 180. I think as we move closer to this 120 area, I think it actually presents a decent opportunity for MDB and some of these other software stocks. But you want to keep your stops in play, because if this one in particular fails to hold 120 support, I think it could easily be back down to 105, 110 to test these areas. So I don't want to just go in and just hold it, but I do think this could be presenting an opportunity. So For that reason, the MDB is your scooter mover of the day.
All right, time for those upgrades and downgrades. I have a few for you. We're going to start off with some upgrades. Chegg was upgraded today by Jefferies from a hold to a buy, and they have moved their target from $46 to $44. So they did lower their target just a bit. Let's put that in there. So that's where the new target is. So I thought it's interesting that they moved from 46 to 44 on their new buy. Personally, if I were looking for a buy, I'd want to, get up here to the high we've seen for the year. The question is, of course, how do you set this on a buy when you're seeing support broken like we just did right here? And then you can see that we have support that could hold down here. Personally, I wouldn't be looking at any sort of a buy when I've got momentum looking this shaky, really not good. Notice also with the OBV and with the scooter, we're seeing this decline on both of those. So, interesting upgrade. I always find these interesting. Personally, not something I would be upgrading today, but I can sort of see the idea behind holding this support level. But personally, again, I wouldn't upgrade until I saw that support level hold. Next up is Las Vegas Sands. This was upgraded today by Deutsche Bank from a hold to a buy, and they have moved their price target from $69, which I'm guessing is right about here, near that top we saw. Yep, right there. And they've moved it up a whole dollar to $70. So, I like the looks of this chart. Obviously, there are a lot of things on it that I look for that are great. One is a PMO buy signal. Another is the OBV, on balance volume, traveling in the right direction along with this rally. So that's very positive. I would look here at the bottom of this gap that we saw back here in August. Let's move that this way. And as you can see, we got the breakout. We've now closed the gap. I would be a little bit concerned about this 200-day EMA as the next area of overhead resistance, but certainly looking at the setup right now of this chart, I think this one does look pretty good on that upgrade. And then finally, last one real quick is Hewlett Packard HP. And you can see that we also are getting this PMO buy signal. So again, this chart looks pretty bullish. This is a downgrade, but it was downgraded just to a neutral. But volume is going the right way with this move to the upside. We closed that gap right here. So that I think is positive. A lot of times you could see once the gap closed for it to move the other direction, but I would be looking for a continuation of this rally to the upside. So again, it's always interesting to see these upgrades and downgrades, but also they moved their target to $20. So this is why it's a neutral right here. It's because they're still looking for it to move up, but not that high, which would be, I think, the best area of overhead resistance right here would be at 21.79. That would be my target if I were in on a buy here for the intermediate term. All right, that is it for upgrades and downgrades. There you go with the list. It is quite long today, and we will be right back with the popular and famous Monday setups after this. We are back with Monday setups. We didn't do one last week because there was the holiday. So we're actually looking at a 2 weeks time period, which sometimes works out better, Tom. I think we did pretty good on our picks this last time. I think you beat me out, though, with a bigger gain. But let's go ahead and look at VICI. This was in real estate. I've been expecting, we've seen real estate do well, so it was a pretty easy pick for me. At the time, we had this double bottom, and we had just started to execute it right here. That's when I'm almost certain that's when I picked this one out for you guys. And we got the execution. We've just about hit the the minimum upside target, and it is starting to curl a little bit to the downside, and momentum is starting to slow, but volume is still coming in nicely. I think this one could still be a hold, but probably one that I would be watching kind of closely here as it turns over, at least for a short-term investment. That would be a concern for me. And you had VIPs.
Yeah, that one had pulled back, I think, heading into that, I think it was on August 26th. It had pulled back, was down close to those two moving averages, the 20-day and the 50-day moving average. Volume on the recent move to the upside came in after earnings was announced. So this was a stock that quickly became one of the best looking charts in the broadline retail space. And currently VIPS is trading near a 52-week relative high to its peers and close to a 52-week relative high to the S&P 500 as well. So I do think this one looks good. Kind of like the one you had, Erin. I do think there's some overhead resistance here as you go back. Yeah, the top there back in May, and then even more recently in July. 9.25 is going to be an area where if I was in it back at the setup date a couple weeks ago, I'd probably be thinking about taking some profits just because overhead resistance is approaching. But I do like the stock, and a breakout above that 9.25, 9.30 area would be really bullish.
Yeah, absolutely. I like the look of this chart myself as well. Look at the 50 just crossing above the 200-day EMA. That's a long-term trend model buy signal. And it puts this chart in a bullish configuration as far as decision points models go. But let's see, I will give you my choices for this week. I am starting a new newsletter called the Decision Point Daily Diamonds that I'll start publishing every day, where I'll give you 5 of the selections from one of my scans. And you can take a look at it like you do here on Monday setups. And if you decide you like it, great. If you don't, that's fine too. But did some of that legwork for you. But keep an eye out. I'll be printing my first one today in the Decision Point blog. So I think that should turn out to be pretty good. All right, here we go. So my first one is Federal Signal Corp. Commercial vehicles. We have noticed a bit of an improvement here in the industrials and transportation in particular. I like this breakout we're getting. Granted, this is a 2.4% breakout today, but I would look for a continuation, maybe a bit of a pullback here to that breakout, and then a move to the upside. I'd be looking for a target right there at that high back there in late July. Smart Global, this was in my daily diamonds on ChartWatchers that I did yesterday, or Friday. A nice big move off of that. I didn't expect quite that kind of follow through on the rally that we were seeing, but it had just pulled back and I really liked it. And it's really still set up quite well. I would watch possibly for a pullback if you want to get in on the short term. I think this is perfectly fine in an intermediate term basis. It does look like it's starting to pick up some strength, and notice, unlike the other times, it's turning up above that 0 line. So I think it's even a better look. But my pick is actually One Main Holdings. It's in the financials. And this is the weekly chart of it. Let me go first over here to the daily chart if I can find the daily. Well, no, can't seem to find it. So let me go ahead. I'll just move it into a daily setup here. Not that one. There it is, MarketWatchers. All right, I'll talk about those stops and that in a little bit. I didn't say I saved the daily, saved the weekly, but not very well. So we have the breakout from this double bottom configuration. You can see it went into it. You need to see these reversal patterns. You want to see a move to the downside if you're looking at a bullish reversal pattern. I think this one looks good. You got the breakout. Hard to beat that. But my short-term target would be right here at that top here in August. And my stop in the shorter term would be right around that $36 mark, right around that 20-day EMA. And then I did do a intermediate term chart, and these would be my IT target and IT stops, with this being the weekly chart. So that gives me a little bit better handle on what's going on. for the intermediate term. So I think this one is looking pretty good in both areas. And that's what I had.
All right. Well, I am going to step out on a very fragile limb this week. And I'm going to go with software stock. And like I mentioned earlier, software stocks are really getting hit hard today. Many of them, many of the leaders. It seems, I don't know if this is a permanent rotation out of software, if it's just some profit taking, using some money to move into some other areas maybe that aren't quite as frothy. But here is AVLR, Avalara. I'm going to go ahead and go. Let me get the update, just make sure I got the latest price. 76.43. And you look at it and you say, wow, the stock was $85 early on Friday. It's come down quite a bit. But I think it's getting close to an area. And you could, if you wanted to be a little bit, I'm not going to say, well, maybe it's a little bit safer. You might wait and just see end of the day to see whether or not it holds on to support. What would be best is to see a big swoosh to the downside and a recovery in the last couple hours today. But here was an area that we really struggled to get through on AVLR for about 7-8 weeks, trying to get through this 75 level. We finally did it. Nice volume beginning of July. When we did finally run into some selling just before the earnings report came out in August, you can see we came back down. We held that 75 level. Stock had gone from 87 to 75 in 5 days, and then started to bounce a little bit into earnings. And then when the earnings came out, they beat on their top line, beat on their bottom line, jumped up. And looking at this, you can see on a relative basis, at the time, AVLR was absolutely soaring against software. So it was one of the best stocks out there. It's a smaller company, but you can see the software still remains in an uptrend, although, you can question here. I'm actually watching that June low. I think that's a really important relative low on software. So we're coming down. We're getting closer to that level. We still have room. And, you go through periods where the group, even back at the end of May, you can see that huge move down, moving down to about a 5-6 week relative low, but we never went down below the prior low, and then we simply moved back up again. That's what I'm looking for here. So I think some of these software stocks pulling back the way they have could be presenting nice opportunities. I think the volume trends here still remain good. I think that anytime you have a stock like this that's fallen as much as it has, you start to see panic. It works the same way in individual stocks that it does in the overall market. When the selling hits, it tends to hit much faster, and panic sets in. And so one way to play this, or maybe to consider playing this, is to wait and see if in fact the panic sets in, and then you see the buyers come back in and hold on to a key support level. So this is one you certainly could hold off. We can't do that in this competition. So what I would say is this. I actually wrote about this one, said I liked it at 80, or at the current price, which was low 80s. I like it again around 75, and I would keep a stop on a close below 74. Only because if it does fail to hold 75, I could easily see the stock moving back down to 64, 65 to test this low, maybe even 63. You've got the bottom of gap support 60. There's a lot of different places down here that I wouldn't be real comfortable holding on to. So AVLR, to me, I like it. That's the reason I'm going to go ahead and use this one, but definitely a reversal would make me feel a little bit better about the stock. All right, I just had two others I just wanted to mention here. One of them is, let's see here, INFY. This one broke out, had really nice earnings. And you can see the big breakout with heavy volume last week. We're coming right back down near the area of the breakout, which I like. So I think 1160, which was the breakout, down to the rising 20-day moving average at 1140. I think that's a good entry area there. I would look for a return back to the recent high and eventually a breakout. And then the other one was a breakout that we saw, or that we're seeing today, and the volume is picking up today. And this is Lattice Semiconductor. I really like the way the semiconductors are starting to look again. You can see we're getting close to about a 4 or 5 month relative high. LSCC has been one of the best performers relative to the S&P and relative to its semiconductor peers. So I like the stock. I think this breakout looks like it is signaling maybe a continuing move to the upside. All right, those are our Monday setups for this week. Erin going with OMF. I like OMF as well. That's actually in my income portfolio. One of my top 10 stocks for the income portfolio. So I think OMF is a really good pick. I think that one goes higher. And it pays a nice dividend too. I'm not sure what the dividend is, but that's why it's in the income portfolio, because of its dividend. I want to say more than 2%, but maybe you have that.
Yeah, let me look really quickly. OMF. It would be a yield of 1.99%.
Yeah, so 2%. So not only are you getting stock looking good on your PMO and the way you look at it, I think from an earnings standpoint, it was a great recent quarter that it came out with, pays a nice dividend, and is a little safer than a lot of the other stocks that are just getting whipsawed back and forth.
Sure thing.
All right, so there you have it. OMF and AVLR. I tell you, my pick could be at 62 next week, or it could be at 90 or 100 even. I mean, I have no idea. We'll find out though. All right, it's time to move on to the earnings spotlight, and for that we have just the right guy, John Hopkins. John, how'd you fare with that hurricane coming right up there in Charleston?
Tom, thanks for asking. A lot of wind, a lot of rain. That was it.
Just little wind.
Some wind, some rain, and very fortunately, we're about 5 miles inland, which won't matter if it's really bad. But yeah, we were spared. I'm very grateful. Especially considering some other parts of the world that didn't fare so well. We were very very lucky. Thank you.
Yeah, I tell you, the Bahamas, that was it's really sad.
Terrible.
My gosh, I mean, first of all, have a Category 5 hurricane coming across the Atlantic like that is one thing, but to have it just sit on an island for about a day and a half, just crazy destruction.
Unbelievable.
Some really sad stories. Prayers certainly going out to everybody down in that area, and really up and down the East Coast as well. I mean, this was a pretty amazing storm. It was a Category 2 hurricane when it hit Canada yesterday or the day before.
Yes.
That's crazy.
Yeah.
I don't know. I don't know how many Category 2 hurricanes Canada sees. I'm guessing not too many.
I think you'd be correct.
I'm just guessing.
Absolutely.
Sure, we have some folks in here listening to us that can answer that question, but I don't know too many of them. But anyhow, all right, earnings. It's earnings season. Well, it's actually after earnings season, but some key companies out there. What do you have today?
Well, I always like to refer to my article, my MarketWatchers article, which, this weekend also featured a stock, Roku. And the reason I featured it is because it's part of our model portfolio at earnings beats. It's, it's pulling back just a teeny bit today.
Yeah.
But the stock essentially, you just look at it, it's been a double. It's just unbelievable. We added it to the portfolio, and it made a great move. It was up 60%. Then we revealed on the 19th of August the new batch of stocks, and lo and behold, it just continued its march higher. No telling if we're going to get some profit taking, but certainly this is the kind of stock that we're interested in inserting into our portfolios.
Yeah, it's been a tremendous relative performer. That's how it got into the portfolio to begin with. It was a leader. Great earnings report. I mean, you can see on the chart, you can see the huge move up here in May. This was the reason. I mean, when you get a gap up like this from 65 or 64 to 70, and then after the gap up continues that same day up to $83, $84, and on this kind of volume, there is no mistake in what's going on here. A lot of accumulation. And I think that even though a lot was built into that earnings report that they delivered in May, I think the market was saying it was going higher. And that's exactly what we've seen. Now, this is a stock that's been under tremendous accumulation. It's extremely overbought. And one of the reasons why I tend to look at 70 not so much as an area on the RSI to sell, because you can get a stock that's overbought and it stays overbought for just a long period of time. I mean, if you look back, this stock became overbought back in the second week of August when it gapped up to the 120 level. And now, well, as of Friday's close, I guess it was at 170. And like you said, it has definitely come back a little bit today. We'll pull that chart up and show you where it is right now. I know it was pulling back, I don't know, $4 or $5 earlier. But this was a company, and I saw this morning. Roku they weren't upgraded, but their price target was raised. And I want to say it was at Bank of America.
Okay.
Their price target was raised from 60 to 163.
Oh boy. Great.
So, I mean,
awesome.
The stock was at 169. And they had an analyst that said, well, we kind of missed the boat on this one. Being on the sidelines was not exactly the correct play to play this, which I thought was like one of the biggest understatements of the year. But they decided they're going to raise their target from 60 to 163. Now, the good news is with today's selling, it's hitting its target.
Yeah, there you go.
They're genius. They got a
Unbelievable.
target of 163.
I love
But
it.
They said that they were staying neutral on the stock, though. So they said that there are some catalysts out there that could take it higher, but just based on valuation concerns, they were neutral.
Well, I pointed this one out because I was talking about the model portfolio. And if you go back to November, it goes to show you, even with the market fluctuating, a lot of volatility, that if you happen to be in the right stocks, you can do quite well. And it turns out that the model portfolio going back to November of last year is up about 56% compared to the S&P of 10. And it's stocks like this that have really powered it higher.
Yeah, and it's outperformed every quarter. I mean, it's definitely, and the whole idea, the strategy behind it is you're taking 10 equal weighted stocks in 10 leading industry groups and riding them for 90 days until the market tells you to get into a different set of 10.
Now
and
let's
the whole idea.
Yeah, let's flip now. Let's look at the because things don't always work out. But if they don't work out, you've got to have a plan and a strategy. And the stock that we had out as a trade alert was EHTH. And this is a stock that we put out to our members, back in August when it was in when the stock was in the 95, 96 range. But what we do, is we set a price target, but we also have a stop loss. And in this case, we had a stop loss of any close below 93. So it closed at 92.75, you can see, and we got out of the position. And I'm bringing this up, Tom, because it's been absolutely hammered since then. So if you're going to get involved in a trade, you have to have a couple things. You have to have an entry price, you have to have a price target, and you have to have a stop loss. And unless you're prepared to honor the stop loss, things can get very bad. And I think the stock's been down maybe 17%. In addition to the couple percent that, we lost when the trade didn't work out.
Yeah, this one was kind of perplexing to me. I mean, you try not to argue with, when price support's lost, the 50-day moving average is lost, the 20 crosses below the 50, volume picks up on the selling. That kind of begins to tell you there's something that's just not quite right. And I know during most of this, the 10-year Treasury yield was struggling. And when the 10-year Treasury yield's going down, many times life insurance companies, which EHTH is part of, tends to struggle right along with it. But we had a bounce in the 10-year Treasury yield. If I pull that 10-year Treasury yield up, and then we'll come back to this, the 10-year Treasury yield actually started bouncing back here we bottomed in, maybe 3 months or 3 days left in August.
Yep.
We had a double bottom, but then, we've been coming back up, but we're now back to where we were on the 10-year Treasury yield, the highest level we've been in probably about 3 weeks or so. And if you go back and you look at the stock, it is still trading down near its low. Something is going on here, and don't know exactly what it is, but it certainly doesn't look to be very good to me.
Right.
And here's life insurance. So when the yield bottomed,
I can see it.
You can see life insurance starting to get a nice move to the upside. It started outperforming the S&P 500, and yet EHTH can't catch a bid and continue to underperform. Now, a stock like this, because it is a very aggressive stock and it grows its earnings very rapidly, if there's any sense that they're not going to meet earnings estimates going forward, a stock like this can get hit really hard very quickly. And so I think what's happening is there are some folks either anticipating or maybe they're getting word that EHTH is not going to hit its next quarterly target.
Yep.
And we'll have to wait and see if that's the story or not. But EHTH, I agree, this is a beaten down stock, and I think you got to keep your stop and play for trading it.
All right. And just real quickly, a stock that just reported earnings, Lululemon, had a great response on great volume. You can see that. Already is pulling back, but I'll tell you, if we can get this thing down in the 190 range or so, it might get my attention.
Yeah, gap support just below 190, and then price support maybe around 193. So as it pulls back, I agree. This is actually looking a little bit to me like a Keysight Technology chart when we had the big breakout here. And then we pulled back, really big down day the next day. And then before you know it, 2 weeks later, we're right back up near the highs.
Yeah.
I could see something similar going on here with Lululemon.
Yeah.
Back, maybe getting back down here and then making another turn back to the upside. Great volume. And the one thing I'll say, clothing and accessories has not been a good area of the market. You can see on a relative basis versus the S&P been going down. But if you're going to play the group, Lululemon is one of the stocks you want to consider. Look at the relative strength versus clothing and accessories. And even though the group has been underperforming the S&P, Lulu has actually been outperforming the S&P 500. So this is one of the leaders, just came out with great results. That's why it was a leader. And I think a pullback could be an opportunity. I agree.
And this was on our Earnings Beats Digest today featured. I featured it today. And the whole idea was, let's not chase this. Let's wait. And sure enough, nice little pullback, be a little bit more patient. And I think that once things settle down, this would be a stock to look at.
I would agree.
Okay, now I want to mention, of course, big event for us coming up today. You'll be there.
Yes.
And really, it's really all about changes we're making at earningsbeats.com that I think are quite positive. You're going to come in. You're going to talk about some of these things. A lot of people, of course, know at this point that you're coming back as chief market strategist at earningsbeats.com, which is so exciting. And this is an event that's open to anyone who wants to come on by and join us. It'll start at 4:30 p.m. today. And you can see on that page there, you can join the webinar by putting your name and email address. At the bottom, too, you'll see a link, a Zoom link. That's something else already, by the way, that I think will be an improvement is we're moving away from Adobe and into Zoom. And I think that's going to be a very positive for us going forward.
Yeah, I wrote about it this morning. I'm actually really excited about this because it's really the evolution of a lot of things in our business over the last 15 years. And even, using the fundamental side kind of dates back to my days as a CPA in public accounting, and just marrying both fundamentals and technicals together and using relative strength and so forth, just putting more and more of this information together, I think is pretty powerful. And so, yeah, we're going to talk a little bit about some of the services and products that we'll be offering going forward. And I hope everybody can make it. As John said, it's open to everyone. There's no cost whatsoever. You can sign up. This will get you signed in for our Earnings Beats Digest newsletter, which is free. And there will be information being sent out about the webinar in the room and instructions. But you also can just simply go to this link down here if you'd like and click on that. But the room will open at 4 o'clock. And the webinar will begin at 4:30.
Awesome. Look forward to seeing you later.
Yep. Can't wait. I'll see you there, John. Have a great afternoon.
You too.
All right. Okay. I think it's probably time. Actually, you know what? We might have a minute or so, Erin. I know on Mondays, a lot of times we'll do sentiment. And with the market moving up, and I was a little nervous today because we're not seeing leadership in some of the areas. I'm not sure this sideways back and forth stuff's over yet. We got a big Fed meeting coming up. So I thought maybe we just talk for a minute or two about sentiment.
Sure.
And, you have any interesting charts there to share?
Yeah, this I found this is the AAII investor poll. Generally, I don't put too much stock in these polls. Let me go ahead and update this to the right time. But one thing that I noticed with this one is, we had just hit a low on that bull bear ratio, or bear bull bull bear ratio. Typically when you get these lows, you're going to come out and start seeing the market turn itself back around because we have way too many bears. Well, you can see that's changed. Bulls are growing, bears are not. But notice when that came in, that sentiment came in. Granted, we still had a little bit more downside to take into, but that really came in at just the right time. Currently we're rising and we're not bullish enough that I would be worried as far as sentiment, because you can see the high here from last week is much lower than the peaks we've seen before, and those are the ones that precede those downside moves. So I thought that one was interesting. And then I know Ridex was pretty quick, interesting here as well, seeing money rotating out of those bear funds and coming out of the money markets, or money markets staying about the same, seeing a little bit more cash here. But that's equities starting to grow. So clearly we're starting to see a move now out of that bearish camp, and people starting to feel a bit more bullish. And while that can be bad for the market, I think in the intermediate term, I don't think it's going to be too damaging.
Mm-hmm. Yeah, I think.
Yeah, go ahead.
I didn't know if you had like, if the put call ratio, I know that's something.
Yes. And that one, the only thing I'm really gleaning from that is we could see a continuation of this rally because we were at lows here on those put call ratios. That means when we have this, and it is an inverted scale, as those numbers get bigger, that means you're getting people more interested in those puts. And so you're going to start seeing that moving lower. The larger the calls ratio, that part of the ratio, that means people are getting really bullish when it's smaller. So we're really still seeing lows there on that put call ratio, getting the gains right now on the equity put call ratio, but certainly not in that overbought territory. And generally when you come out of these put call ratio lows on my inverted chart, you start to see that move to the upside. So I think that this is telling me we could still see a continuation here as far as the put call ratios.
Okay, cool. All right. Yeah, I'm always a little nervous in September, just sentiment wise, just knowing September's here. I would just say that from a historical perspective, the worst part of September tends to be from about the 20th to the 26th. Options expire. You were just talking about puts and calls. Monthly September options expire on Friday, September 20th. And the week after options expiration tends to be a rough week anyway. And it just kind of lines up with all of this. And then you got the Fed meeting the 17th and 18th. And we know what's happened after the Fed meetings, several of the Fed meetings over the last year. So later this month, even during the month, I think we got to at least remain somewhat cautious just based on some of the historical tendencies. But
yeah.
Absolutely. All right. Well, we ready for 10 and 10?
You betcha. Let me go ahead. I'll show you that RRG here. We're going to move this to a daily because we do look at these in the shorter term and fit that in there. Look at all the blues moving to that, the areas you want to see. Let's go ahead, and we're going to go ahead and start with the one and just technology heavy requests today. Definitely technology heavy. So we'll get some of those in for you guys.
All right. First one, Ford.
Indeed.
So let's take a look. I'll be honest, I'm not a big fan of the auto companies just because they tend to go through these periods where they have a little bit of a move to the upside and they just never seem to follow through. Many of these auto companies are no higher than they were 8 years ago. And when you consider how far the bull market has run, yeah, they have a nice yield, but if you're going to fall so far behind the appreciation of the overall market, it just doesn't make sense. So I always tend to be somewhat bearish looking at these companies before I ever even pull their chart up. And so I look up this and I see a move down, a double top going in, and a failure to hold that prior low. Downtrend in play. We move back up, but we're testing the 50. We got overhead resistance at gap resistance up near 975. The 50-day moving average 955. We've just run from 870, which is about a 10% jump to where we are right now. I'm not a fan of Ford. If I was in it, I would be taking profits and looking for something else.
All right. And one of the most popular, certainly not having a good day. And I know I'm still holding it. I don't know about you, but AYX.
Yeah, it's actually in one of my portfolios. So yes, I am holding it. and not excited about it. But as I was telling, John and I were talking about it, it's one of 10 stocks. It's equal weighted. So when it's down 14%, if only 10% of your portfolio is in it, you're really down. Your portfolio is down 1.47% as a result of this. So it's going to happen from time to time. And when I mentioned earlier that these stocks get hit a lot faster to the downside than they tend to go up, I think this could be a poster child of that. I still like the stock. Now the question is, where are we going to find some support? Software overall, as I mentioned earlier, really getting hit today. Many of the stocks that have been leading in software are getting hit the hardest. I would expect, here was your earnings gap up. I'm going to be looking at the bottom of this gap for buyers to come back in to the stock. I think all of a sudden things are going to be looking a lot better in terms of reward to risk. So I think if it gets down to about that 116 level, and we almost got there. I mean, we're down to 120. Stock was on Friday about 146. I mean, this is quite the drop here in just a day or two. And you think, well, maybe something's going on. Well, usually a business doesn't change in one day. So I think what's going on is anybody buying up in the 140s is panicking right now in the 120s. But I think that'll create some opportunities for other buyers to step in. I'd watch 116.
All right. Let's see. The next one is in the exploration and production industry, Crescent Point Energy, CPG.
All right, CPG, nice move to the upside here. Again, I'm not saying this is like the autos, but it's kind of like the autos in that this has been a stock that's in a group that continues to underperform. So yes, it started to show some strength. I love the fact that it versus its peers, it's now at about a 10 and a half month high. I think that's very constructive. It's starting to show strength versus the S&P at about a 3 to 3.5 month high, even though the group has been horrible. Volume is coming in. I think there are some really good positives here, but I'm not going to chase a stock that is part of a weak group. So I'm either going to wait and see if I can get this on a pullback to maybe test that rising 20-day moving average. I think also there were a lot of tops in here around 345 right in here before we broke out. So I think a pullback down closer to 345, 330 would be maybe worthwhile if you like this space or you like this stock. I think ultimately the big level is going to be 440. I think it's got a chance to run there.
All right. I'm going to give you one in that software space that actually is doing quite well, which is DocuSign.
Yeah, they just came out with earnings last week. Really, really strong earnings. I would probably take my profits right here, just based on what's going on in software overall and the fact that you've had such a huge run up on this one in just the last couple of days. There's your overhead resistance. We took it out on an intraday basis. A lot of times if I own a stock like this and I'm breaking out to new highs, I will then go in and put a stop at the breakout level, because if I leave a tail up there and fail and come back down, I think to the downside, 54 is probably a short-term downside target if it fails on this breakout. So move back to 54 would be almost, well, probably about 8% from where we are right now. But just with what's going on in software right now and the fact that it's up and it's hitting overhead resistance, I'd probably take my money and run.
All righty. Next one up is XOP.
All right, XOP. Well, I don't have all those relative charts, but rather than change the chart, let's just go ahead and annotate this one. I would just say, you're in this downtrend. This is oil and gas exploration and production ETF. Yes, we're rallying, but we've got overhead resistance coming in. Here is the bottom that we saw back in December. We broke down. Now we're getting up close to that resistance area. I'd pass.
Okay. Next one, maybe you've heard of Alphabet.
Another one?
Alphabet, Google.
All right. All right, Google. Internet, I think actually this month and next month, averages gaining 12% in September and October of the last 20 years, the internet group as a whole. That's pretty impressive. And if you look at Google, Google is right now breaking out to about a 4.5 month relative high. So I think more than anything, I like that right there. The fact that when you look at them versus when you look at it versus the internet group right here, we are making this breakout above these prior highs. I think that is a good sign. I like the group. This was earnings related. I believe we're going to go head back up here and test that overhead resistance up around 1245. So that's why I'd look for short term.
All right. I like this stock, which means you probably won't. Let's see. Grubhub.
This one was really beaten down in the restaurant space. I don't know. Yeah, no, I don't like this one at all. The big volume, I think there's a lot of distribution in the stock. I don't like this failure at the 20-day moving average with that black candle after the move higher. Yeah, I mean, look at the stock relative to the restaurant stocks. If I'm going to own a restaurant stock, I want it to be Chipotle, which got upgraded today, Shake Shack, even Starbucks, which warned a little bit last week. All of those look so much better to me than Grubhub. I need to see some relative strength, not seeing it yet just here. So I would just simply cite that right there, this failure right in here at the 20-day moving average, and all of this volume, the selling, the relative weakness, all of that. No, I'm not a fan.
I think for bottom fishing, I guess I should have made that a little more clear. But how about Kellogg, K?
Yeah, and I think Grubhub too is probably moving higher from well below that center line, I'm guessing, on your EMO. Kellogg, I like. Here was the move up with earnings. Nice sideways consolidation off a downtrend. I think that's a character change on the chart. Bouncing off the 20-day moving average, always a good sign. Now pushing to new highs. I think this is a stock that looks really good going forward. It's much more defensive, so it gives you a much more of an element of safety. I think for now we're in this trading range, but I look for it to eventually break out to the upside.
All right, Steel Dynamics, STLD.
All right. I noticed steel was having a pretty good day today, along with aluminum, and stock moving up through its 20. But another one that when you look at the relative charts, I mean, that's really all I need to see to be pretty not feeling very good here. But just if you go down the chart, you're gonna see a lot of those downtrending lines. So I'm gonna pass.
All right, and the last one is Zoom, ZM.
Yeah, this is another one in the in that space. It's being hit, or well, it's another one of those stocks that had been doing pretty well. Nice uptrend, sideways consolidation. Just seems like a lot of these stocks are getting hit. I would look for one thing here on Zoom, and that is holding gap support. If it doesn't, I'd be out. It went below it. I think that's a good sign for possible accumulation. I'd like to see the stocks be accumulated into today's close.
All right, there's your 10 and 10, and we are just closing out the program here, so good timing. There are all the symbols, and time to close it out.
Yeah, we got about a minute here. I do want to, if we have time, to pull that poll up just very quickly and just see what the audience is thinking in terms of the Federal Reserve. Should they cut rates? 62% saying yes, 38% no. What do you think, Erin?
You know, I said yes. I just think right now it would be helpful. I think when we start talking negative interest rates, then I'm going to dig my heels in the sand.
Yeah, I'm going to say that they absolutely should. I don't know what they're going to do. They've disappointed the market on a few occasions, but I think they should, not because of the economy. Yeah, you can maybe have a little hedge in place in case the trade war drags on, but I'm more interested in weakening the dollar. I think the dollar's too strong. I think that it's putting too much downward pressure on commodities, which in turn is lowering inflation. I think they need to weaken the dollar and inflate commodities. So that's the reason I would go with a rate cut.
Interesting.
Yeah. All right. That is it for today. Felt good to be back. Do want to remind everybody, big event for earnings beats coming up after the close today. Check that out. Go to earningsbeats.com. Would love to have you there. Probably be about an hour or so, and it will be recorded if you cannot make it. So keep that in mind. I want to thank all of you for being with us today. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, noon to 1 p.m. Have a great afternoon, everybody. See you tomorrow. Happy trading.